Hey, welcome to Dow Stock Talk, where I talk about topics relating to finance and investing, but more specifically the stock market. In this video, I'll be doing a stock analysis on Snap, or other known as Snapchat. I'll be going over the company's overview, the key highlights, the streams of income, the risk factors, competitive advantage, my personal insight, and whether I think Snap is a buy. But before we get started, make sure you smash the like button because it helps YouTube algorithm. It helps YouTube know that this is quality content and help my videos reach a broader audience. And also, if you're a big fan of finance and investing, make sure you check out my store, Wall Street Stock Apparel, where I make custom finance and investing t-shirts. And also let me know whether you like the format of me being on the webcam on the side versus me sitting in the chair. Make sure you let me know in the comments below which one you like better. But let's get into it. So Snap, or originally it was known as Snapchat, on the company's website, they call itself a camera company. Now, don't think Kodak or Canon or Nikon. Hope I pronounced that right. Don't think Kodak or like digital cameras or something like that. No, all of their camera technology is embedded in their app. So, like I said, they believe they're trying to reinvent the camera experience to create a better interaction when they communicate with people. So, their overall goal is we believe that reinventing the camera represents the greatest opportunity to improve the way people live and communicate. So, Snapchat is an app that allows people to communicate and share images and experience through the app, all through your phone. One of the key features is you can end up sending messages to your family and friends for a short period of time. So maybe they only can view it for 10 seconds or a minute. So that was kind of something that was new about Snapchat. But enough of that, let's get to the key highlights. So Snap right now has 293 million daily active users. They have over 200 million daily active users engaged in augmented reality. I'll go over that a little bit later. They have almost 200,000 lens creator. Anytime people make videos and stuff on it, that's what they call lens creators. And they have 75% of people in the US from 13 to 34, the population use Snapchat. So these are interesting numbers that I just wanted to share. Okay, so if we're looking at the growth as far as daily active users, once again, these are in millions. As you can see, for North America, Europe, and the rest of the world, it has been increasing nicely. So that's something you would definitely like to see. I'll get into the stream to income and exactly why this is important a little later. Now, also, let's look at the innovation that they made over the 9 years. As you can see there, as far as the application and the technology that they're kind of using to improve your camera experience, they have a lot of things. They have the story, API lens, map layers, sounds, so they have been innovating since they was initially launched in 2011. And let's look at the key features that the app put together. So I definitely wanted to clarify this. So Snap is the actual company. Snapchat is actually a product that the company produced. But just know that all the technology and all the value is pretty much based off of Snapchat. So that's why in the video I said Snapchat stock analysis, because all that technology, all the business model drives from this particular app. So the app has 5 key components. The map, which allows you to interact with your friends and know the location. Communication, which is like a simple messaging app. As soon as the app it opens up in the camera, so you can easily create a moment and then just send it to your friends and family or whatever. They also have the stories. Stories is kind of allow you to put the highlights of your day or something so your family and friends can see it. A lot of people may be familiar with this because Facebook and Instagram kind of stole the whole stories concept. And then they also have Spotlight, which works similar to TikTok. I think they kind of copied off of TikTok. So no shade. So let's go over the business model. So the business model is currently 99% of their revenue come from ads. So this is a key component when they say a camera company, where pretty much the whole business model is based off of people using the platform and the ads generate the money, not actually the camera technology. So that's something that you want to definitely keep in mind, that ads is pretty much what drives the income, which makes it more of a social media platform, because the more people that go on your platform, the more businesses will pay for ads, the more expensive the ads can end up getting, and the more money they would end up obtaining. I also wanted to let you know, or let you be familiar with the companies that they have did mergers or acquisitions. They either purchased it or they either joined up. Okay, so let's check out their risk factors. So they got a lot of risk factors. So one of the risk factors is the advertisement business is very competitive. You have the Facebook, the Google, the Pinterest, TikTok. So all of these business models are based off of ads. So any type of social media platform, the whoever has the most people is normally end up being a lot more successful. So you have that. Another thing is they partner with Google, Apple, and Amazon. This plays a key role in providing mobile operating systems for application. So they're really relying on some big players. And also keep in mind that Google makes a lot of their money from ads as well. So that could be conflict of interest or some type of problem if they got too successful. That they end up having or they end up mentioning that I thought was important. So we rely on Google Cloud and Avenue Web Services for the vast majority of computing, storage, and other services. So they're really relying heavily on these big tech firms that's out there. Of course, any type of hacks. And by the way, they have a long list. I think their risk factors the risk section goes from like 43 to like 71. It's like super long. So if you guys were investing in this company, make sure you check out the risk factors. As far as their earnings and stuff, it may fluctuate, so it may be difficult to be predictable as far as earnings. The cost may increase at a faster rate than they're able to innovate. So they mention a lot of different things regarding that. All right, so enough of that. Let's jump into the financials and see how that financial is doing. I'm on Simply Wall Street. Sometimes I like to do this because it's a fast and easy way to just kind of review the financials. Okay, let's see how the stock price has been doing. Max. Company has only been public since 2017. As you can see, it was kind of just pretty much steady until COVID happened, and then you've seen a huge increase from $9 to 72. That is a major gain right there. So COVID, they really benefited a lot from COVID. As you can see, the 1-year return is 661%. That is awesome compared to the industry, which is 57.8%. Even the market, so Snap has been crushing it as far as returns anyway. Volatility, as we can see, it is a little bit more volatile than the industry, but it's relatively new company, so that's what you expect. Let's look at the evaluation section, which kind of basically base a company's value off of projected cash flows, and then they end up setting it back to future value. It's a kind of complicated process, but it's pretty much coming out what the company should be valued today based off of future cash flow. Has a whole channel for discounted cash flow, how to make it, and he does it for pretty much every single company. So make sure you check that out. As you can see, I wouldn't worry about the price to book for this one, but the value of the stock as far from the discounted cash flow, they said it's a little bit of overvalue based off of the cash flow, which is $75 versus the fair value, which is $55. And also, most of the time, as you can see, all of these are red, simply because most of these metrics is based off of earnings. So that's exactly why you end up seeing that they're not profitable. Now, like I said, I'll skip all these price to earnings, I'll pretty much skip all that. But as you can see, the future growth, nice future growth. Analysts can be wrong, but 34 analysts in the next 1 to 3 years are projected to grow 71.3% in earnings. So that is really good. The revenue has been increasing steadily. The earnings have been increasing slowly, but like I said, they're not projected to be profitable into the projections to probably 2023. Still, you have a negative free cash flow, which is meaning more money is going out than coming in. It looks like maybe in 2022, they'll be able to produce a positive cash flow. As we went over for earnings, it's 71.3%, and for annual revenue, it's 33.2, which is always good when you're beating the industry in the market. But it's also good to mention that, of course, their earnings will be much higher because they're losing money. So the less money they're losing, the higher percentage it would end up going. So even though their earnings increased from 71.3%, they still would be losing money just at a slower rate. And for let's go with the financial health. So the financial health to me seems relatively decent. Not perfect, but it seems decent. The assets cover short-term and long-term liabilities. I would actually like to see the assets for the short-term switched with the long-term. Also, I would end up showing the amount of cash that they particularly have. So their balance, their financials is pretty solid. It's covered. This is the amount of equity. As you can see, the debt has been climbing up there lately since the pandemic, and that's what Simply Wall Street was identifying. But if you look at the cash has increased dramatically. So it's given them more than enough. If they really wanted to pay off the debt, they can. So in my opinion, they're kind of using debt as leverage with the low interest rates. That's just what I personally think. That's why I wouldn't worry too much about it. See, a lot of inside trading going on here, so that's interesting to keep in mind. I just kind of pay attention to that. A lot of inside trading there, especially in 0 to 3 months, 3 to 6 months. A lot of inside trading. So to me, that's kind of a red flag right there. Now, as far as the ownership, so we see institutions got about 53%. Individual inside investors have 24%. So this is really critical because we've seen a lot of inside selling there. So keep in mind that the inside investors has 24.1%. That's a good amount. The general public has 22.2. So it has been relatively versatile, but institutions as the 53%. It would be the key movers as well as insiders. Let's check out Yahoo. And as you can see, this is Yahoo. Sometimes I just refer to different platforms just to kind of get an idea of how their setup is kind of different. And some information is better to see on different type of platforms like this one. When I just want to see how the earnings have been lately, I just go to here. So you can see they have been beating earnings consistently for 4 quarters, and I'm hoping that they'll be able to do the same. As we look at for the quarterly, as we can see, as far as earnings has been inconsistent. They lost some. They have been losing, but sometimes it's been much more than others. Earlier on, they were saying they kind of fluctuate, so it's hard to be predictable. So this is justifiable. Okay, and this is just an add-on. So as you can see, the revenue has been increasing. Sometimes this may be easier to view. Cost of revenue has been increasing as well. Gross profit has been increasing on the upside. Research and development for growth stocks, I really pay attention to that. I would like to see a lot of money put in that way. And this is the income. Of course, we know that they're not making money. Operating expense as well. And one of the things I kind of really want to point out to the company's evaluation, which is at $118 billion. So their valuation is at $118 billion. They're losing money, and they also only have a revenue of about $2.5 billion. And we talking about total sales. So from a validation perspective, this would very suggest that you're paying a premium and you're banking that the revenue will grow very quickly. Because right now they're a $118 billion company and their only total sales is $2 billion. I like to look at what different analysts are saying. So because this is a growth stock, sales growth is really going to dictate it. So from the current year, 67%. For the next year, they have for 2022, they're projected for this particular year 46%, which is really solid. As we look at the recommendation from Yahoo Finance, they have the target price, it's $85. I don't put too much emphasis on it. I don't really trust other people. I just don't take their word. I kind of based off of my own research. Now, as we also look at, this is Seeking Alpha, looking at some of the competitors where you can kind of compare other competition. So as you can see from the valuation perspective, so the price to sales is 32. So that's relatively high. Look at all the other ones. So you can think of price to sales as like this: for every $32 worth of sales, you would make $1. To let you know how much value you're getting, Twitter 11, Pinterest is 14. So as far as the amount of that you're getting for the stock price based off of the revenue, it's pretty high. But my overall opinion, whether I think Snapchat is a buy, me personally, I'm not a big fan of Snapchat because they make, like I said, their business model is based off of ads, and I'm willing to bet on Facebook, Pinterest, Google as far as dominating that industry. So the fact that they only have one stream of income is simply based off of ads, which for me, why I wouldn't buy. In addition, as we looked at some of the risk factors, they're actually depending on a lot of key players as well. So for me, as far as Snap as the company overall, I think they're a cool company, but as far as the investment for me, I think there's other better alternative. And I'm not, as far as the business model or something, I'm not too keen on it. But like I said, if you're buying off of other stuff like momentum or technical analysis, you may look at this different. But from a value perspective, business operations, to me, it seems a bit pricey. But that concludes this video. Let me know in the comment below, what do you think about Snapchat? And if you haven't already, make sure you hit the like button. And if you're new, make sure you subscribe to my channel.